Hey everybody, it's Pete. Good morning. Thank you so much for joining me today. It is Tuesday morning, April 27th, 2021, and we got a lot going on the magic sheet here again today. A really, really good day to be a trader yesterday. Follow through across the board. Just one of those days. We actually were joking around yesterday that trading recently has been a lot like golf. Where one good hole makes you come back. And yesterday was that one good hole where everything was just kind of flying off your fingertips. We had a really good watch list yesterday. Hopefully you watched yesterday's video, which is why it's very important to click down, click subscribe, and make sure you click the alert button, because we had a couple of really, really big winners. Specifically, we gave you good levels in MVIS yesterday, and we mentioned skills actually last week, and then again yesterday. We'll take a look at those two charts. So we're going to go over the market in general, looking at the major ETFs, and then how that's going to work its way over into individual trades. We have a decent list of technology stocks that we're going to go over today. Basic materials were kind of strong over the last week and a half, but we're going to jump right over into the list right now. Let's just get right into it. Let me pull up the disclaimer and we'll get started. Okay, so first let me just hop over to the screen. I want to walk you through. Let's actually start out with the top of the line stuff yesterday. If you remember yesterday, we actually said that MVIS, based on some opportunities that we've been looking at recently and some external stuff, this was the big level. You can see that we've been watching this level now for months. Finally punched through that level 2 days ago. Yesterday was on the watch list. We were actually keeping an eye on it. We said over 20 was the level, 1920. Finally punched through that level and gave you a really good day trading and swing trading opportunity over the last week. So now here's the trade here. What are you going to do in this stock today? We know it cleared levels. We know it punched through some big levels. Now what? Well, today we're looking for the bullish echo. One of the biggest conversations that we've had recently, I'm going to come back on the screen really quick, is when you decide to accept risk on a trade, you're putting on your trade here and you're expecting it to go somewhere, right? So within that window is a opportunity to make money. That means that your job is to buy as close to what you perceive as the optimal entry from your profit target. So that distance needs to be big enough to justify accepting risk. But more importantly, there needs to be profit on the table in order to want to take that risk in the first place. So now you have to ask yourself, if I put this trade on right now, what are the odds of following through in the time period that I plan to hold it? So now most swing traders hold stocks anywhere from 2 days to, on the high side, let's just say 10 days to 14 days. Based on that and based on what this stock normally does, at this moment, it's not a good swing trade anymore. When we broke out, we actually broke the downtrend that was from April to April 19th. We had to, and I'll actually show you what that looks like. So we broke that, and that was roughly around $11. So now we just went from 11 to 28, and the stock normally moves in $7 increments. So it's already gone almost double what it normally does in just 4 days. So now we're looking for what we know as the bullish echo in this stock. So day traders can now take advantage of this in a situation where there's going to be plenty of opportunity within that window, but the window has now shrank for swing traders. So the bullish echo means it's still an obvious buying opportunity, but not a good swing trade until it pauses and gives us a new spot to manage risk. So that risk gives us a chance to earn money. So again, remember that if you could visualize this, and I like to do the visualizations because you need to ask yourself before you place every trade, how close am I to the optimal entry? And if it's already gone like this, where it's literally off the screen, it's probably too far from the optimal entry for that time frame. However, the day trading window, you can get back involved. So I just want to make sure I point that out. So hopefully you got the alert in the last couple of days. And we're going to take a look at skills, same exact thing. But skills is actually, let me show you the trend that we were talking about. So we're basically talking about this move that finally cracked here. So right here in this $11 window is where we're looking. That was MVIS. Now we're going to take a look at skills, SKLZ. We reported last week, as did everybody else, Cathie Wood buying 3 million shares. And that was the news here. But we said, not yet, not yet, not yet. It needs to get past this. And then we came into yesterday pausing last Friday, which was just an amazing entry sent from heaven, where we paused right at what we had as a significant level, popped through that level yesterday, and now it's slowly starting to build a position up in that direction. So obviously the next level that we're looking at is between 30 and 32 on the upside, which still has plenty of room to go for a new swing trade, because yesterday was the optimal entry inside of SKLZ. However, we want to point out something from a position sizing. This is a big part of trading too. You have short-term conviction versus trading with order flow. Are you buying with 1 day's worth of order flow, 2 days, 2 weeks, 2 months, 2 months? The more order flow and the more recent and the more obvious the order flow, the deeper pockets have made a bigger commitment to that idea. Because if you think about it, that's really what we're looking to do. We're looking to hop on board the deep pockets, the smart money, and just catch a ride with them, right? So it's our job to find what they're doing first, find the optimal entry, and then learn how to hold those trades for as long as possible. But now this trade here, there's the Cathie Wood news. We finally broke this downtrend. There's a couple of different things going on that said, yeah, let's sit up in our seat and let's take a look at this, right? Not to mention the amazing entry and the optimal entry that we had on Friday. But it's still in bearish order flow. We're just now cracking the other side of that. So if you have a choice, everybody has a choice to allocate a certain amount of money to a position. I'd like to just use 2% versus 1% as an example. The numbers will switch for everybody. So let's say, for argument's sake, you have $20,000 and you know you're going to risk $20,000. Certain ideas are good ideas. Certain ideas are okay ideas that could become good ideas. In this case here, it's an okay idea turning into a good idea with a lot of reasons to be looking at it. But because it's good, not great, I would be allocating 1% of my position to that. And then as it moves in my favor, I'd be adding to it. If it's a different situation, which we'll take a look at STX in a moment, where STX has had bullish order flow, which makes it a good position already or a good idea already, that would be 2%. Because it's already moving in the direction that I want. So it's not the beginning, it's already there and pushing higher. So take a look. So just keep in your mind, is this, how close am I to the optimal entry? Is this a good position or a great position? If it's a good position, you start to work in order and add more as it moves in your favor with a lower position sizing. If it's a great position already, optimal entry, and has room to go, then you can be a little bit more aggressive on your position sizing when you enter that trade. So we'll actually take a look at STX, losing it. So this is a little bit different, right? You can see we actually got up to the breakout level, paused there, had a bunch of melted candles, and then now we just had basically a $14 rally off of that. So you already had confirmation from the smart money. One thing I want to talk about, obviously, we're going to talk about Microsoft earnings today and what to expect. A big part of the earnings after the bell today are about the cloud computing, which has really two things, actually. Cloud computing, which has really turned the company around in the last 5 or so years. And the second part is obviously the subscription-based services now for everything that they do has brought them in a completely different type of revenue. So if we go to the charts and take a look at Microsoft, what can we expect based on where it's trading? Now, what I love about the stock right now is that it's pausing near all-time highs. Now, the other thing that we'd want to pay attention to, and this is a really big classic technical analysis lesson, is anytime something moves and pauses, you want to pay attention to the volume within that pause. If volume is heavy, that means there's distribution or smart money is changing over to weaker hands. We're not above the average volume right now. I would have preferred to have seen it drop like this, a lot less, but we're not above the average. So I'm expecting Microsoft to actually have good earnings and bounce to the upside. Now, very similar to what we've been talking about, whether it's Snap, American Express, Tesla, which we're going to talk about in a second, you still need to let price action unfold. There's no reason to take unnecessary risk unless you really have a solid argument for the idea prior to the earnings coming out. So I'm looking, as long as it stays above 260, I'm still looking to be a buyer. If it breaks down, I'm going to leave it alone. But the important part here is the price action and the volume, combining those two things together and reading the tape in Microsoft. So I actually want to get into so I gave you the level. 260 is the level that I'm looking for in Microsoft. What's interesting, we reported last week about a possible bullish surprise in American Express. The stock gap down. Immediately, buyers step back in. This is a question we get all the time about how soon do I get involved in the market? Well, sometimes you need to let the dust settle after everybody's digesting the news, looking at the news, going over the news. And then they start to put their positions on. American Express now came roaring back 2 days after, and now we're sitting at a really good clean breakout level. So the level that I'm watching now in the community is 150. So again, needs to stay above 150, pause here for maybe a day or two, and then I'm looking to get a new earnings catalyst shooting the stock higher. Speaking of earnings catalysts, we're going to talk about Tesla. I got a lot of questions yesterday about Tesla. I don't understand. Every number with Tesla was blowout, blowout, blowout. But, here's the thing. This is on the books, okay? $101 million profit, which is a part of what they earned as a company. That has nothing to do with selling cars, okay? So the Tesla interpretation is down $19 right now. That's the immediate reaction. We'll see if that stays there. $700 has been the level that we've been watching. So now we have almost 12, let's say 12 hours, 18 hours, whatever it is, from yesterday's announcement to today's open. Now there's been a lot more time to digest the Tesla news. Does it matter? Everybody's now digging beneath the numbers and saying, okay, now let's get to the numbers, push aside the crypto numbers, and actually see what happened with Tesla's stock and Tesla's earnings. Are they something we can sink our teeth into going forward right now, separate from the number that's included with the crypto, which isn't part of all of the numbers? As long as Tesla stays above $700 today, maybe even tomorrow, then I'm going to look to start buying it again. If it dips back below 700, I'm going to leave it alone. Now, NIO, we actually started talking last week. Let me get the volume off the chart there. We started talking about bullish stocks in a bear stocks in a bullish market. So NIO pushed down, NIO pushed down, NIO pushed down, held, finally had a bullish U-turn here, a bullish U-turn here, and now it's spiking. Now it's actually bouncing up through resistance and heading into the 50-period simple moving average. So this is where we're looking for an existing swing trade to pause, looking for it to sit here for a day or two, and then we're looking for a new run up to 50. So now it's day trading, bullish echo, day trading in NIO right now, looking for a couple of days pause, and then looking for a new swing trade up to 50, maybe even 55. So a ton of earnings on the calendar today. We're also going to take a look. Pre-market today scheduled is General Electric. I'll give you a quick list, and I'll post this list below. JetBlue, nothing really beautiful here about JetBlue. I will say this, though, just as a side that doesn't have earnings today. The cruise lines and the airlines are kind of still hovering, which is actually a good thing to see. No pun intended. 3M has actually performed really, really well over the last 2 months, basically. So earnings coming out today, maybe a little bit of profit taking. That's fine. I still like the stock long. UPS, UPS and FedEx have actually been pretty strong. They actually paused here, but now they're kind of in a trading range. So UPS coming out today, scheduled pre-market. Waste Management, unless I specifically say I'm looking to trade them today, I'll let you know, but I'm just giving you a list right now. Waste Management has been pretty strong. And again, this is one of those trades where it had a significant move. Then you pay attention to what's going on in the pause. And during the pause, you could see that we still had some bigger days on the downside, which is not what you want to see during a pause heading into earnings. Eli Lilly, okay, not really much going on there. Again, just giving you the list. Pulte Homes as well. After hours is Microsoft as well as Google. Googl. Okay, so Alphabet. Starbucks. Starbucks has been one of my favorite stocks to trade. Also, AMD. We initiated a swing trade yesterday in AMD. We're looking for it to stay above 84. That's our line in the sand. We had a buy stop in that yesterday. Amgen, which has been performing relatively well over the last 6 weeks as well. Visa, Pinterest, and brings me right over. Actually, let me go over to COF. Okay, COF had a nice breakout yesterday, as well as Discover Financial doesn't have earnings today, but I really like this breakout. We called this one yesterday as well. What I want to bring you over to is ENPH, which has earnings scheduled after the close today. Okay, this is, you can see that it's perked up here a little bit. I'm actually going to go over and give you a bigger list because this is something that we've been paying attention to. Solar stocks have started to heat up, no pun intended. So I want to give you a list of a couple of stocks to pay attention to right now. So ENPH we have on the screen. Sun W is another one that is starting to perk up a little bit. DQ is obviously now past some significant levels. And JKS is one that is still in a longer-term downtrend since February, but we're starting to see signs of accumulation down in that area. So something pretty exciting to watch. Now, if this sector lights up, it can, again, no pun intended, if the sector lights up, it should be pretty interesting to trade. They were one of our easiest stocks to trade last year. So I just want to give you a couple of other ones that we're paying attention to today. STLD, other stocks to be looking to buy today. So you can see a really good clean breakout there yesterday. CRSP, again, long-term trend. We're right at that level right now. This is, again, good versus great. This is where you start to pay attention to, okay, push down, sideways, finally breaking out. First time it's punching through. FCX, look at this breakout. Very affordable stock for a lot of people. We need to stay above 40 over here. Alcoa, obviously earnings last week fighting its way back the same way that American Express did. But the last one I want to finish up with is actually two, STX, which now STX, which we just mentioned. Yesterday was called out as a swing trade in our community. I said, no, look for a bullish echo today. The odds of following through on a swing trade over the next week are lower. Look to day trade it. Yesterday gave some great day trading opportunities. You can see it's actually trading down. So this is a good example. You probably want to snapshot this as an image of a bullish echo. So obviously strong, but a better day trade until it pauses. The one that I want to point out here is net. One of the biggest scans that we run every day is I'm always looking for volume. I'm looking for price action. I'm looking for volume. I'm looking to put them together for something significant. Well, over here last week, net had really big volume. We said, put it in your watch list, put it in your watch list. Danced around for a couple of days, and then the buyers stepped back up, and now 4 strong days of trading. Those little things like that where you dig in when you do your game planning, don't just look at price action. Don't just stare at the moving averages. Don't say the moving averages are all in the right order. Dig in, go in there, work the charts like you see. I'm drawing trend lines, drawing boxes, drawing levels. What's the real price that price is fighting at? That's real trading. When you start to pay attention to price action and volume, great trades start to pop off the screen. And that's where you put on your overalls and you do a little bit more work. And that's where the money's hiding. It's just that one little step further to pay attention to. So anyway, thank you so much for joining me today. I really, really appreciate it. Got a lot of good questions yesterday because obviously we're giving a rundown of some of the best ideas to consider during the day. But the last part of that is actually where to get in and where to get out. I get a lot of questions about getting our stuff, which is the entries and exits. So you can actually get them sent directly to your phone. You'll get my entries, my profit targets, my updates, my market updates. Everything sent to your phone. The trial is only $49 for 30 days, and you get to keep the course lifetime if you decide you don't want to keep the subscription. So click below. I'd love to see you on the other side in that as well. So have a great day, everybody. Thanks so much for joining me. Be awesome today.